Welcome back to EDU-Tutor. Today we want to look at sales journal. Now, the sales journal is also known as the sales daybook, and remember that this is a type of book of original entry. Now, what is the purpose of the sales journal? It is to record the sale of goods on credit. So, if we sell goods to a customer and that customer paid cash, you will not find that transaction in the sales journal. They have to um, buy the goods from you on credit. Now, goods, what are goods? Goods are items that are bought with the intention to be resold. All right. And the source document from which information is taken to prepare the sales journal or the sales daybook is the sales invoice. Now, let us look at this diagram here. It represents the sales journal. So that is how our sales journal will look. We have the date, the details, the invoice number, the folio, and the amount. Now, this word, it tells you where you can find the other parts of this transaction. So, where next? So, remember that after we prepare our journals, we prepare our ledgers. There are three ledgers. We have sales ledgers, purchases ledger, and general ledger. Sales ledger is for receivables. Purchases ledger is for payables, and general ledger is for all the other transactions, right? So, since we record goods sold on credit in our sales journal, most all of the transactions that we have in our sales journal will be found in our sales ledger because these persons would be our debtors or accounts receivables. All right, so that is why. All right, so let us interpret this sales journal. In 2018, on the 4th of February, M. Morgan would have purchased some goods from this business on credit, and it was worth $18,000. On the 10th of February, N. Young would have purchased some goods worth $20,750. And on the 28th of February, D. Pendergast would have purchased some goods worth $22,325. Now, at the end of the month, which is the 28th of February for that year, we would have transferred total credit sales to sales accounts in general ledger. So we're transferring all of the credit sales to the sales account in general ledger. And the folio for that would be the general ledger, since it is there that we're transferring the data to. And the total would be $18,000 plus $20,750 plus $22,325, which will give you $61,075. Now, I'm going to show you how this looks in your ledger. All right. So in your sales ledger, you would have each person's account. So for M. Morgan's account, on the 28th, on the 4th of February in 2018, we would have sales, which is the other account that this transaction would affect, and it's $18,000. And it would be a debit to M. Morgan's account. Since M. Morgan is a receivable, we know that receivables are assets. Now, since receivables are assets, we know that assets should be debited when there's an increase in the value of the asset. All right. N. Young is also a receivable, and he purchased some more goods on credit. So he's owing us more money. And since he's owing us more money, we debit his account to show that his account would increase. All right. And then we also have D. Pendergast. D. Pendergast, who also purchased some goods on credit. $22,325 on the 28th of February. So all of these accounts would be debited since they are all receivables and their accounts are increasing. Now the general ledger now would have the opposite, so the credit entry for these transactions. So instead of singling out each sale, what we do, we just transfer the total credit sales to the general ledger. To be specific, the sales account in the general ledger, $61,075. All right, so I'm going to do an example with you for this. So let's look at the question. It says enter up the sales table with the following details and post relevant items to the sales ledger. Also show the transfers to the sales account in the general ledger and show the folio number which is beside each transaction. And they gave us a list of transactions. So I'm going to be showing you how to work that out. Okay, so the first thing that we're going to do is to read the transactions, and then from each transaction we need to determine what we're going to do, if we need to put it in our journal or not. And then we're going to do our sales ledger. All right. So the first one, credit sales to J. Gordon, $8,987. Remember that we put credit sales in our sales day book. If it's a sale and we received cash, we cannot put it in our sales day book. All right. So the 1st of March, the year was 2007. The details would be sales. The invoice number is 89, and sorry, the details is J. Gordon. Invoice number is 89. Folio is sales ledger and is 187. All right, so the sales ledgers, we're going to find this transaction since the person or the details would be a accounts pay accounts receivable, right? So it's a debtor. And we said that there are three ledgers: sales ledger for debtors, purchases ledger for creditors, and general ledger for every other transaction. So since this transaction affects a accounts receivable, it will be found in our sales ledger. 3rd of March, credit sales to G. Abrahams, 76, 166. So we go to the sheet and we're going to put 3rd of March, G. Abraham 76, and it is 166. All right. The 6th of March, credit sales to V White, 107 with $12. So it's the 6th of March, V White, 107 with $12. All right, so we should have put our dollar signs here to indicate that we're going to be working with dollars. And we're just going to put 12 here. All right. The 7th of March, cash sales to G. Abraham 09, the 16th. Now, what do we do with this type of transaction? So since this is a cash sale, we know that we cannot put this transaction in our sales day book because we indicated that only credit sales should go in our sales day book, right? So because this transaction, we received cash for it, it will go into our cash book, right? And our cash book is another type of journal. So therefore, this transaction would go into our cash book. However, the instruction said we should prepare a sales day book, so we're not concerned with this transaction. On the 10th of March, credit sales to J Gordon $199, 199 with $155. So we fill in the figure, so it's pretty easy. The date is the 10th of March, and the details will be the name of the account that is being affected, the other account that is being affected, and in this case, it is J Gordon. All right. So the next transaction, the 17th of March, credit sales to F. Williams, 105 with $289. The date, 17th of March. And the other account that is being affected is F. Williams. And the amount is 289. Now, we already established that these persons are debtors and therefore they will be found in our sales ledger. The 19th of March, credit sales to U. Richards, 66 with $66. So therefore, it is 66. Invoice number is 66. U. Richards is the name and March 19. So it's as simple as that. 27th of March, credit sales to V. Wong, 14 and $28. So it's going to be March 27, V. Wong, 14 and $28. And we continue. 31st of March, credit sales to L. Singh, 63 with $78. So invoice number is 63 and $78 would be our figure. Now remember what we should do at the end of the month. We should transfer the totals to our general ledger. So it's transfer total credit sales to sales account in general ledger. Right? And we're going to total this column. So we're summing all of this column. Now, since I'm working with a spreadsheet, I'm going to go ahead and just allow it to do the calculation, and the folio for that would be the general ledger. All right, so that is how your sales journal would look. Now, I also said that I'm going to show you how your sales ledger would look. However, I'm not going to show you the total debtors. I'm just going to show you the first two. All right, so let's do J Gordon's account. So J Gordon, so it's a typical T account. We know that this is a debtor's account, and since we're making a sale to that customer, his account would be increasing, right? So he owes us more money. So therefore, it's a debit to the customer's account since a customer is an asset, and when assets are increasing, we debit. All right. So it's going to be the 1st of March for the date. The details is going to be sales, and the folio is going to be sales journal. The amount would be 89. All right, no, 187. Sorry, this is the amount here. All right, and we do that for each of these persons. So I'm going to do two more of them so that you can see what it would look like. Going to skip a line for each. So we're doing G. Abrahams and V. White. All right. On the so for G. White, the date was the 3rd of March. He did some sales. So that's the details. The folio is the sales journal because that's where we find the transaction. And amount would be 166. All right. For V White, look at the row. 6th of March, V White did some sales for $12. Folio is a sales journal. All right. So let's put that in. 6th of March. Details is sales. Folio is the sales journal. And the amount is $12. All right, and you will continue to do that for the other transactions. So if you have any questions, please put your comments below and I will try my best to answer them as quickly as possible, right? But you have to ask your questions if you have any. All right, so for the general ledger now, remember we said that we will transfer our total sales to our general ledger. So let's show that. So this is our sales ledger. Sorry, this is our sales account. And remember that your general T account has your date, your details, your folio, and your amount. Now, when you make a sale, you normally credit sales. All right. Whether it is a credit sale or a cash sale, sales account is usually credited. And it goes back to the fact that sales is related to inventory. Inventory is goods. So when we sell goods, the amount of goods in the business is decreasing. So that means that the asset of goods is decreasing. And when an asset decreases, we credit. All right, so that's why we credit sales. Now, we're showing how we transfer our credit sales to our sales account. So on the 31st of March, we're going to have the date. The details is going to be transfer. There's going to be credit sales for the month and the folio is going to be the the sales journal and the amount is going to be the $981, which is here. All right, and just like that, your general ledger, so your sales account will be completed for that transaction. All right, so that is just me showing you how your ledgers would be related to your journal. And to be specific, in this video, we looked at the sales journal. So we completed a question on the sales journal. We spoke about what the sales journal is used for and all of that. All right. If you have any questions, please comment below. Thank you for watching.